So this one has got a catchy title. I didn't change it much. This is from our friends at Realtor.com, and it is about who's buying all the houses. New survey reveals the top competition right now. We're always talking about the market and how crazy it is, but yeah, who are the suspects here? Who are these people? So let me go ahead and get started. Just about everyone knows the housing market is blistering hot right now. One look on Realtor.com will confirm there aren't many homes for sale. And what is on the market has a supersized price attached to it. However, even in such a challenging market, first-time home buyers were able to beat back competition from swarms of millennials, cash-rich investors, and baby boomers looking to downsize and purchase about a third of all of the homes for sale, according to the National Association of Realtors annual Home Buyers and Sellers Generational Trends Report. They represented about 34% of buyers, up from 31% in the previous year. Go millennials. All right. Given everything with the COVID-19 pandemic and the shortages in inventory, it's encouraging seeing younger buyers entering home ownership, says Brandy Snowden, Director of Member and Consumer Survey Research at NAR. The report is based on a 129 question survey filled out by nearly 5,800 people who bought a home to live in between July 2020 and June 2021. Income data is from 2020. All right. Millennials made up 43% of home buyers in the past year, compared with 30% in the previous one. However, older millennials aged 32 to 41 were more likely to be selling their homes rather than entering the market for the first time. Many people recognize what a house offers, not only shelter, but also long-term store of wealth, which has enabled prior generations to build a solid financial foundation and even move higher on the socioeconomic ladder, says George Retu, Manager of Economic Research at Realtor.com. In times of rising inflation, buying a home can serve as a way to control spiraling costs by either locking in a fixed rate or possibly minimizing monthly expenses. With rents also surging, many first-time buyers may lower their monthly expenses by buying a home in markets where the monthly cost of monthly or mortgage payment is lower than comparable rent, he says.
I will say in our market that is not the case. But go ahead and continue. Sure.
Well, I don't know where the article is, but I was reading. It was another catchy headline. 6 markets where you can buy a home between $100,000 to $200,000. And yeah, it was out in the snowy fields of the East and Midwest, and it wasn't desirable. But the other thing this is reminding me of too, Darren, is have you heard of this 1% rule for investors? That if you cannot get rent that's 1% of the purchase price, then it's not a good investment. And again, I was saying to myself, where do you find that? Because none of that makes any sense, at least where we live. Okay, so who's out there competing for homes? In such an overheated market with many more buyers than homes for sale, it's good to understand the competition. Millennials have made up the biggest percentage of home buyers since 2014. About 81% of younger millennials aged 25 to 31 and 48% of older millennials were first-time buyers. As millennials transitioned from one stage of life to the next, their preferences shifted from renting in urban downtown to buying in the suburbs, said Ray too. These trends started before the COVID pandemic, but accelerated as health concerns, social distancing, and remote work became the norm. Due to the sheer size of the generation, millennials are the dominant demographic group in today's housing market.
In regards to that, I will say that they're moving there because that's what they can afford in most cases. They can get some more needs met. The article continues to talk about where they've sacrificed, where buyers are sacrificing. But I think, at least in the LA market, so many potential millennial buyers are just priced out.
Yep. Well, we've heard it a couple times at open houses, but it's great to hear young couples who might be just pre-wedding talking about, I think we're just going to buy a house. We're not going to spend on the wedding.
Yeah.
Good for them. Baby boomers, many seeking their forever homes, purchased the second most properties, often competing with millennials for smaller, more affordable abodes. Young boomers aged 57 to 66 made up about 17% of buyers, while older boomers aged 67 to 75 bought about 12% of homes. They were followed by Generation X, aged 42 to 56, who made up 22% of recent buyers. These buyers were often looking for larger trade-up homes. The silent generation, aged 76 to 96, purchased 4% of homes, while members of Gen Z, aged 18 to 22, represented just 2% of home buyers. With prices hitting new highs and many sales going for well over the asking price, buyers were wealthier with a median household income of $102,000. They were also overwhelmingly white at 82% and heterosexual at 89% of buyers. Just 6% were Black, 6% were Asian, 7% were Hispanic. Respondents could select multiple races, and 2% chose other. Yeah, I imagine.
I will say,
yeah,
good time to step back and just realize that this is a national survey here.
Yeah.
So, yeah.
That was my comment about multiple races. I think we get a big mix here in Los Angeles.
For sure,
yeah. Nearly 2/3 were married couples. Many were two-income households, often giving these buyers an edge in affording high housing prices and the bidding wars that followed. Single women, often living off of just one income, represented about 19% of buyers. Roughly 9% of single men were in the market, as well as 9% of unmarried couples. While younger generations have postponed major traditional life decisions like marriage, they recognize that buying a home does not have to be tied to a specific life stage, said Ray too. Single women see real estate as an important component of economic well-being and long-term financial stability. Okay, why are home buyers braving the challenging housing market? Even in the face of such daunting struggle, finding a home that met their needs, coming up with the money to afford it, and prevailing in a bidding war, buyers weren't dissuaded. The top reasons to purchase a home, even in this crazy market, were that they wanted to own a property of their own. They wanted larger residences. They wanted to be closer to family and friends. There was a change in their family circumstances, such as marriage, divorce, or birth of a child, or they sought a property in a better location. However, nearly 3/4 of buyers were forced to compromise on what they wanted in a home. About 27% of buyers compromised on price, while 21% settled on the home's condition. Buyers also made trade-offs on the size of their residence and their yards, along with the distance from their family, friends, and jobs. Buyers are compromising more because of the lack of homes available to view, says Snowden. Overwhelmingly majority of buyers, 87%, took out mortgages to finance their homes. They were helped by record low mortgage rates, which fell to the mid 2% range in late 2020 and early 2021. Rates have since shot up over 4% on 30-year fixed rate loans, according to Freddie Mac. And the median down payment was 13% of the sale price of the home. Wow, where's that, Darren? What today's buyers want in a home? All right, sellers, here you go. As the pandemic dragged on, buyers continued to prefer their own space. The majority, about 82% of home sales, were for existing homes, which are previously owned abodes. Only about 15% of sales were for new construction, mostly from buyers who didn't want to deal with the renovation or problems with the house and wanted to customize their new abode. Just 7% of sales were for townhomes and row homes. 3% were for duplexes and condos in 2 to 4 unit buildings. And 1% was for condos in larger buildings. The typical home costs a median $305,000, spanned 1,900 square feet, wow, and had 3 bedrooms and 2 bathrooms. It was built in 1993. Despite all of the headlines screaming that city dwellers were leaving in droves, the percentage of folks buying in the cities and suburbs remained mostly unchanged over the past 2 years. Most buyers moved only a median 15 miles away from their previous homes, not across the country. Just over half of all buyers, 51%, purchased in the suburbs, 21% bought in small towns, 13% purchased in cities, and 12% became homeowners in rural areas. Just 3% purchased in vacation areas. We're not seeing huge differences, says Snowden. Wow, man. With some of the information you know and I know, right? Los Angeles lost, what did they say, 176,000 people?
Yeah,
Vacation areas?
So the survey is, if they're talking about 13% buying in cities, the survey is skewed towards representing more about the suburbs, right? 50% of this data is coming from suburban patterns.
Where did they get their sampling? You're right.
Right.
Home sellers are making big profits. Many home sellers made some big money off the sale of their properties, pocketing about $85,000 over what they originally paid for their abodes. They typically lived in their homes about 8 years. Sellers typically got the prices they wanted for their homes, with only about a quarter reducing the list price of their properties. Their homes sold for a median $315,000. The steep price appreciation of the past 2 years topped a decade of steady price gains, the result of growing economy and lack of meaningful new construction, says Ray 2. For many homeowners, even some who may have purchased fairly recently, the jump in prices meant that they were able to sell for significantly more than what they paid for their house. In such a hot market, only about a quarter of sellers reduced the list price of their homes. Not surprisingly, baby boomers represented the largest percentage of home sellers at 42%. There you go.
Yeah. So, nice breakdown. I like the way the article covers a lot of different segments and who's moving and why they're moving. I like that it talked about compromises, because that is a very unsexy part of the conversation with buyers,
Sure.
But it's a realistic one. Where are you willing to compromise? What makes the most sense?
Yeah.
So there you go. Let's kind of breaking it all down. Although the survey was done a while ago, and although the survey is broader than Los Angeles, it also covers a lot of suburbia. I think most of it makes sense. There'll be some shifts, certainly at price points and stuff like that. But
one of the things that I was talking about earlier with you was, there's not really a view here. This was about individual home buyers. There really wasn't a view, in my opinion, of corporate or more investment-oriented buyers.
Yeah, right. And I don't think they mentioned how the competition being investor buyers as well, and how that's affecting the overall market. But by us starting out talking about interest rates and how it's becoming even harder for investors these days to compete if interest rates are moving more in that category, and they're more rate sensitive because it's about return for them rather than a place to live. Another component to factor in.